everyone. Welcome.
That's right. This is Dave, Bath, and Beyond, where we're all about mortgages and
And
more.
more.
Today's our 11th episode, and in honor of that, we're actually not going to talk about Fannie Mae guidelines. Can you believe it? We're going to be talking on the Beyond part of our name here today. So, first and foremost, we're a couple of loan officers. My name is David Dowd, and I own my own company, David James Investments, and I'm out of Texas, but I can help in a lot of states, so make sure to check my website for more information.
I'm Bathsheba. I'm so happy to be here, and I'm with Gross Capital. I'm licensed in the state of Florida. We do commercial, real estate, refinance. We are connected with so many banks, over 150 banks. Thank you guys for your support. We appreciate it so much.
Today's recording is occurring on February 23rd, 2025. So anything we're talking about is from that point in time. So things may change, obviously. So definitely always do your due diligence before making financial decisions. And we are also at this point, if you're just watching the video, we're not your mortgage loan officers at this moment, so be very careful about that too, okay? But definitely reach out to us if you'd like us to be, either one of us, to be your mortgage loan officers. So for today's Beyond subject, we're looking at credit cards today. We're going to talk all about credit cards. This is where we're going to just be sharing our personal experiences with credit cards to be precise, as well as what you can do to make the most of credit cards if you are going to do that. Now, I know anyone who's a big fan of Dave Ramsey probably will just want to watch the next episode, but I encourage you to stick around because even if you're on the Dave Ramsey camp of we don't ever use credit, it's really good to know what your options are. Because remember, at the end of the day, the more options you have, the better off you will end up being in most cases. So let's talk about it. Bathsheba, what are your thoughts on credit cards?
Credit cards are a two-edged sword. It's just how you use it. It's like fire. You can use it to cook, you can use it to keep yourself warm, or you can burn the whole house down.
Yeah.
So I like to use it for cooking. I use my credit cards. I maybe have about my personal story. I usually have like three credit cards, but I use them for points. So I like to use credit cards that have points, cash back. I have a Freedom Chase card. Chase is not sponsoring me. This is just, I've been using them since 2014. So I've used them for a long time and I love the points. I pay, everything I can with that credit card and then I just pay it off. And the way I pay it off is I don't wait until I get my monthly statement. Let's say I buy something today and I see it pending. The next day I'm transferring the funds and I'm paying it off.
Mm.
So it doesn't really even hit my statement. Like by the time that I have a statement balance, I've already paid it down so much because you can do up to four payments in one day. So I'm hit every time I see it, I'm just paying it off. So by the time I get my monthly statement, I may have a $20 statement balance due. And with those points, I can get gift cards. So once a month, I go get a gift card for a restaurant that they have there, TGIF for Tuesdays. And then I can just use it and then me and our family will enjoy the points. There, I transfer point per point. So 1,000 points gets me $100 gift card, and then I just use that. I think that's right. Please don't quote me.
Okay, they're
Right.
ever changing. So for now, a lot of them work that way, yes.
I use it wisely, and I always ask for a credit increase. But if they say that they're gonna pull my credit, I say no.
Well,
But if they offer me that you're eligible, and then they ask you for your income, and I put my income, and then they give it to me. They usually do that if you've been there for a long time, and don't do the minimum.
no, that's how they get you. If you do the minimum, that's what they want you to do because
Yes.
then they're going to make money off of you. Just so you know that's why they seem predatory. I'm going to say that right off the bat. Credit scores in the 800 club, Best you and I are there. Big part of that is just being very responsible
Yes.
when you're given the ability to use other people's money. That's really what credit is, in a long
Yes.
story short, right? So the way I look at credit cards is very similar to Bathsheba. We're getting these cards because we want to be able to buy stuff that we're going to buy anyway, and we want to get a benefit out of doing the thing that we're going to do anyway. So, like, if we paid with a debit card, we paid cash for it, wrote a check, we know that that's that. That's the transaction. And for people that are not responsible with credit, or perhaps it doesn't work out for them, there's something in their mind, whatever it is, this is not for everybody. I'm gonna be completely honest. Like if that's you, then do not do it because you won't be doing yourself a favor. Okay. Very important. Everyone's journey is different. And it's important that we realize where our vices are. And if your vice is, I irresponsibly use credit because I forget to pay it, or I use it and I get what I need, I'm about instant gratification. I'm not about that whole delayed gratification camp. And paying cash is a better way to keep yourself in line, then follow what Dave Ramsey says and stay away from debt, except for mortgage,
Yes.
because that's what they say mortgages are fun. But if you are responsible with your credit cards, you are responsible with your monthly payments, and you're keeping up with things, and you're never paying the minimums, you're always paying it off every month, then credit cards will probably have a versatility for you. They'll have a utilization, if you will, like a tool. Money's a tool.
Yes.
Credit cards are also a tool. I like it because I can buy it now and then I can pay for it later. So if it doesn't line up with when I get paid, for example, or when funds are available, and I need that thing sooner than later. For example, I have a young baby. If we need formula and we haven't gotten paid yet to buy said formula, it's nice to have that extra layer of credit there for two reasons. We can get it now. Obviously, the baby needs to eat now.
Yes.
And second to that, it's like, cool, we're going to get some benefit from that. So points, whether that's cashback or travel rewards or whatever else they're offering. For me, I try to utilize the cashback as much as possible. I feel like the travel thing, it can be very advantageous, but the points, their values change in comparison to when you're buying plane tickets. So I'm not a huge fan of that. But I
Mm.
know that there are people out there that are very gung ho about that, like credit card churning, and we're going to go all over the world for free, whatever that means. There are a lot of cool videos out there. You should definitely consider checking that out. If that's going to be you, if you plan on traveling, you can utilize credit cards to travel for a very low amount, for the plane ticket, that is. Maybe even the hotel. It just depends like how your network of your credit card works. It's a couple things there as far as credits utilization. For me, also, I do enjoy keeping up with the different percentages. That's another thing too. I've got a few different cards. So Bathsheba, I think you mentioned you have three credit cards, is it?
Yes, I may have more, but there are three of the main ones that I use.
I think I've got closer to 10. Yeah, I've got closer to 10 credit cards, but that's because each credit card has its different thing
Right.
that I enjoy utilizing. So, for example, I have a Bank of America card, and I know a lot of people don't like Bank of America because they're very predatory when it comes to their checking and savings accounts. They'll keep
Yeah.
your money hostage for a fee. So just be aware of that. But at the same time, their credit cards are not really that bad. So I utilize one where, depending on the category you spend on, will dictate the amount of cashback you get. So I think it's three is the top category. So I use it for gas. Anytime I gas up my car, I use that card to get 3% back. My goal is always to increase the
Yes.
percentage I get back for based on what I'm doing. Okay. So there's another one, it's a Capital One, I believe it is, and they give you 3% back if you buy food when you go out to eat, or you buy some sort of entertainment. So like going to the movies, movie tickets, that kind of thing. So I use that one for those things. And then I have another one as a through Venmo. Okay, Venmo has a card, and it too is based on its spending category. So I use that one to buy groceries. So as long as I keep buying groceries and only buy groceries with that card, it will always be 3% cash back. So
Mm.
things like that. So it's very strategic. And the other ones I have, there's a Wells Fargo, and then there's a Citi, the green and blue one. And they're
Hmm.
2% cash back on no matter what. So if I can't justify it on any of the other ones, then they just go on one of those two. Mostly the Citibank one, just because Wells Fargo is another bank that a lot of people have had a lot of problems with in the past. So just definitely check the news. You'll see all you need to know about both Bank of America and Wells Fargo. But I haven't used the Wells Fargo. I got that actually so that I could get something that I knew was going to surpass to get their introductory $200. It was going to save me $200 because it already cost more than $500. So it's basically like, okay, well, I'm basically just going to pay $200 less for a
Right.
$700 item. And then I get a full year to not have to pay it back
Yes.
without interest. I pay the minimums. You pay the minimums, obviously. It's like $25 with Wells Fargo, but you don't pay any interest. And so that's another reason I'm just like, okay, yeah, I'll get it now. I'll pay that back later, and I'll just keep it up. You have to have your systems. Okay,
You have to
have
have
your
your system to
systems.
keep it
Be
up.
very careful. Like I said, it's a slippery slope if you're not keeping up with things. If you're someone who's bad at that, someone who doesn't check their mail every week, then you maybe don't want to do this. Okay. But that's what I was doing with that one. For the credit cards that I've utilized, that's kind of my strategy, is kind of what I've been doing with them. But one other interesting thing I did was there's a lot of credit cards that actually do not have an age limit on them. I have a small child and I want him to have really great credit when he is 18. So, first, a word of warning. Just like I've said previously, if you're not someone who's responsible with credit, do not do this under any circumstance. You do not want to ruin somebody else's credit in addition
Right.
to your own. Okay. But I'm not that person. All right. I'm straight up. I know that I'm not that person. So my son already has 6 credit cards, just so you know. He's he's an authorized user on six
One
credit
month.
cards. Yeah, yeah, almost 2 months, right? As long as I'm paying my credit cards on time and there's no issues, which there won't be, then he's going to have an amazing credit score like his dad, and he'll be able to do a lot of things. Now, obviously, in the meantime, I need to be teaching him about the importance of money, the importance of credit, and so on and so forth. So that way, when he gets to that point in his life, he'll be able to make responsible decisions and not ruin everything that we've built up for him. So that's a whole nother story, not for this particular video. But anyway, I digress. There's everything that I have about credit cards in my own life, and there you have it.
I love that you talked about authorizations. I've added my children to my credit cards as well. Another thing is if you're new to credit cards, you turn 18, then here they come, the mail, and they say they offer this and that. Use credit cards as cash. If you don't have the cash to pay for it, don't buy it. Why me and David are such a success when it comes to credit cards is that we live within our means. Like, I'll be transparent. I have one credit card that is like $20,000 credit limit. The most I use out that card is $200 because I don't want to fall into that ditch. So that's the goal. Like, we use it as cash. If you don't have the money, don't put it on the credit card. Number
Yeah.
one. So when you're 18, you're just having a credit, have one credit card, use it as cash, use it to pay your phone bill. That's about it until you're disciplined enough to know how to use it more. Let's say you fall into hard times. Now your credit cards are to the max. What to do now? Work on the lowest credit card limit you have and start paying that down as much as you can. And then once you pay that off, then focus on the other one. But always pay the minimum. Don't miss a payment because that will drop your credit score at least 30%. And it'll take you 3 to 6 months to get it back up. Follow up with your credit cards. Don't run away from them. Talk to them. They may be able to help.
First and foremost, love it. And that's exactly my same theory of it is I don't use the credit card unless I know I've got the cash to back it up. You should have the dollar standard. If you've got the money in the account, that's the only time you're using the credit card. You're basically like, if I use the cash, I just wouldn't get the benefits. That's the way you always got to think about it.
Yes.
But paying off, like Bathsheba was saying, you've got a massive amount of multiple lines of credit that you are behind on and you need to pay them off. Now, Dave Ramsey will talk about 2 different methods in his getting rid of debt out of your life. And I really like what he talks about there. And that's
Mhm.
the one you were talking about, right? The snowball method, where you shoot for the lowest balance, not interest rate, balance. All right.
Yes.
And the reason you do that, even though it doesn't make sense mathematically speaking, it does make sense emotionally and psychologically speaking. Because
Yes.
it's like, look, I paid that off. That's a small win. Now it's going to inspire me and motivate me to pay off the next one and so forth. That's the building of the snowball method, why it's called that. Now, there is another method that is the opposing of that, which is the avalanche method. And that's where you pay off the highest interest first. So it doesn't matter what the balance is. You look at what is the highest interest first. So the one that makes more sense mathematically. And then you just go in that direction instead. That's the avalanche method. So that's what they talk about and the Ramsey camp side of things. And they are very big advocates for the snowball method because of that psychological boost
Yes,
that
I'm
you get.
big on it too. Mm-hmm.
Yeah, no, I agree. I agree. Whatever helps you win the game. Everyone's wired a little bit differently. So
Yes.
if you're like, oh, I must do it with the mathematics and go avalanche. If it's like, no, 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 no. I want to feel good as I do it, then go snowball.
And that's why I mentioned you can make multiple payments. You don't have to wait. Oh, my payment's due on the 15th. I have to wait till the 15th. No. If you get an extra $10, throw that $10 into that credit card payment because the
Yeah.
interest is based upon the remaining balance. So whatever is there, to just throw it in. If you have an extra $5, throw it in there. A little bit becomes much.
If you're a part of the Ramit Sethi camp, that's the I Will Teach You to Be Rich gentleman who authored that book. He is all about automation and automating all of your finances. Like he's big on that because he doesn't want you spending your rich life, as he says, constantly sitting in spreadsheets and constantly sitting there in your banks, and constantly sitting and spending a whole afternoon paying bills. And there can be some wisdom gained from that. Yes. I don't think everything works like that if you don't have a stable income or things like that. It doesn't kind of work out as nicely. But if you do have a stable income, you're a W-2 employee or your business has a lot of stability to it, then yeah, automation is a huge time saver. So if you can set it up to where your credit card payment is being deducted in full, guys, okay, every single month, and you've got enough money in the account that it's drafting from every time, you don't even need to think twice about it. As long as you're sticking with that concept we said at the beginning, which is I don't buy it with a credit card unless I've got the cash in reserves. Now,
Right.
I've got that in reserves. I'm going to buy it anyway. Let's put it on the credit card. Let's get the rewards. Now, I know that there are some out there that say, well, the credit card companies are predatory and there's people out there that are being taken advantage of and this whole scheme. And I'm like, okay, I get it. Some of that might be true. Yes. I'm not discouraging there's no truth in there at all. But at the same time, we're all adults here. And that's just not your strong point, then just don't do credit cards. All right. I'm not recommending that to anyone who's not good with credit cards. Maybe it's you have a lot of fear behind that. Maybe you've had a bad experience, whatever it is. All right. I'm not recommending anybody do that, but just know that this is a tool you could use if you're not one of those folks that gets bogged down by the temptation to spend without any sort of financial backing.
Another good option is if you have your checkbook, see if you can break down your check from your job to see if they can split it so where you can say, okay, take $100 of my check and put it on this account, and then that account will be used to pay your credit card only, and that account will be linked to your credit cards, so they will draft the money from that account that you have automatically withdraw every time you get paid, so you don't even see it, so you don't notice that it's being taken away.
At this point, we can also talk about the benefit of credit. We guys talk about credit cards. You guys talked about credit and how we should or shouldn't do that. But why do I care about credit at the end of the day? Well, why is that important? I mean, I know you guys are loan officers, so maybe that's a part of it. I'm like, well, I'll be transparent. Sure, that's definitely part of it. But even if I wasn't a loan officer, I would still care about credit. And the reason that I do is because it gives me the leverage to use other people's money sooner than later. So I can get that investment property sooner than later, or I could get that vehicle now instead of 3 to 5 years from now, however long it takes to save up a decent down payment or buy the whole thing outright in cash. Time is fleeting. Okay. And it's our most valuable asset. So anything that's going to save me time, I'm going to be interested. And credit is one of those things, one of those vehicles that can save a person time, get you what you need sooner than later. And that's why it's important. So credit score at the end of the day is dictated by a multitude of things. I know we've talked about this in past episodes, but basically, as Bathsheba was saying earlier, a big part of it is paying on time. It's like 35% is payment history as far as the FICO
Yes.
score. We're still using the FICO score at this point because I know they're coming up with other credit scores. But currently, FICO scores, 35% is paying on time. That's the payment history section. So that's really big. And then the second one, the 30% of it, so we're already at 65% of your whole FICO score, is utilization, right? So
Utilization.
how much credit do you have versus how much credit are you using at a given time?
Yes.
That will dictate your score. So 65% of your score is dictated by paying payments on time and how much credit are we using versus how much credit do we have access to. Okay. So the rest of it, there are very, very small categories. Like
Yeah.
how long has your credit card been open for? There's like
Yes.
15%, right? 15%.
Yes.
And then how many lines of credit do you have? And so forth. So those aren't as important. Yeah, they can move it up a point or two, but it's not as important as that. So
Exactly. And it's also important to talk about you need your personal credit score good to get a business credit card because they use that to get your business credit card. And with a business credit card, they don't look at credit utilization. You can ring that up to the rooftop all the way up, but it's not going to affect you, but your personal will.
but also be careful though, because your business has its credit score. So
Yes.
you could bring that to the top. Your personal credit score may not take a hit. Now, there's a potential that it could. If it reports to all three bureaus, then it could take a hit because your name's behind it. But business wise, it's a little bit more flexibility. So
Yes.
definitely use that sparingly. I'd still shoot for the 30% utilization, even with my business credit cards.
Yes.
And on top of that, the other factor here is to go ahead and think of, okay, well, if I'm going to be utilizing other people's money, what if I just pay cash? What if I just do as Dave Ramsey and his camp say, And I
Hmm.
buy everything in cash. And I said, well, you could. Okay, you're going to need a really good paying something or another, whether that's a job, a career, just a buttload of money just falls on your lap, whatever it is. You win the lottery, you get an inheritance, you're a celebrity. Hey, look at you, you fancy, famous person, you. Either
Right.
way, you got to have some sort of windfall of immediate money. Otherwise, for a vast majority of us, it's going to take a really long time to save up for those things. And it
Hmm.
is possible from a mortgage standpoint to do what's known as manual underwriting. So if you don't have a credit score because you've never used a credit card, you've never gotten any lines of credit because again, you're very much against it. You're like money on the barrel, like they say in Little House on the Prairie. I don't believe in credit. In that case, we can do a manual underwriting. It is possible to do that. So if you wanted to buy a house, you wanted to get a mortgage, but you have no credit whatsoever, it's a lengthy process. And you're going to need to show us that you pay things on time. So even if you don't have a credit of any kind, you still got to be able to show us that you're someone that is responsible with money and being
Yes.
lent money, right? So that's another thing I figure I'd throw in there too, since we are loan officers, for God's sakes.
Yeah.
So credit cards at the end of the day, you have to remember that when you swipe, that's the other thing too. There's that psychology of, well, I just put it on my credit card, I don't care. Oh, I don't even think about it. And if that's you, be careful. Okay. Maybe don't, because it's going to get past you and it's going to catch up to you. And it's really bad. But if you're not, and you can take advantage of that, then consider. But open the credit cards sparsely throughout the months. Don't just like sign up for 6 credit cards at once. That'll drop your score.
No.
Okay.
Yes.
Be careful. And if you're being told to close your credit card, be careful about that too, because
Yes.
that can also lower your credit score because of the length of history of your credit card. That will instantly go to zero for whichever one got closed. That includes paying off cards, by the way. So
Yes.
if you pay off a car and that loan gets closed, that too can impact credit. So it's a balancing act in some aspects of credit, but at the end of the day, remember, it is a tool. Okay, it's a
Yes.
tool to be able to use other people's money ahead of time, and that way you can get what you need sooner, whether it be a house, a car, whatever. And student loan debt, just to finish it off here, is terrible, as we've talked about in the previous episode. That
Yes.
doesn't go away with bankruptcy, so be careful. And
Yes.
bankruptcies last for 7 years, so definitely take your credit seriously and use it very carefully. That's all I want to
Awesome.
say. I have a website that I'd like to
Yes.
go ahead and take a moment to just show everybody. Maybe there's some feedback in the comments. That would be cool. Well, this is my company, David James Investments. And you can see that I have all of my social media stuff at the top, which I am working on diligently
Yes.
to get some more content out there, and my contact info. And then here's my homepage where I welcome you to the website. You can see it's got some information about my company. And we get a little bit further down. And of course, there's a shot of me there.
Picture.
Um,
Yes.
I promise you that wasn't taken today. So in case anyone was wondering, kind of looks similar there today. A little bit about me, what's going on with me, my NMLS ID there. It's all over this place. Very important for us loan officers to do that.
Yes, it's very important when you're reaching out for a loan officer is to make sure you see that NMLS. And you can always research it. You can even Google that NMLS and their information should pull up. That will protect you for any mortgage fraud that you're able to verify who they say we are because we are licensed and we're also insured.
That's right. So it's very important to know who you're working with. And so this is part of your due diligence as a borrower. All right, for those
Yes.
who are borrowers. And then, of course, I have a little section here dedicated to Zenix, which is a really big course that I completed last year. I highly
Yeah.
recommend for any loan officers that are trying to get into it and trying to really get into the fine, minute details of this career. It's a great place to go. So, of course, if you're on my website, you can just click any of those links there or just search Zenix Originator in Google and you will find their program there. So it's a little bit more information about that and how to get it. And at the very bottom, we have a mortgage calculator, very basic mortgage calculator. So you can kind of plug in your numbers and see what that looks like before you make one of the biggest financial decisions of your life.
So we have a home value here of
Mhm.
300,000. Then you do a down payment of 16.67. So this is typically a conventional loan. That's usually
Probably, yeah.
kind of high. So let's do a 3.5. Let's see what 3.5.
3.5. So we're looking at the lesser of the FHA, if you will.
Yes, the lesser of
So
FHA, then you see here, you're gonna have to put down 10,500. So you
that's
guys
right.
should just get an idea of how much you'll need to save. So you have a savings goal. And that's just for the down payment. It's not including closing costs. Closing costs is usually around 3 to 5% on top of that. So just keep that in mind. And with the interest rate of 4%, let's bring that up a little bit.
Yeah, I was going to say. Uh,
I would think it's
seven,
6.5,
seven,
but
6.5. Okay, let's do 6.5 because we'll probably, if you're watching this in the future,
yeah,
hopefully we're down there by now. So,
we're there. Yes. So, okay, so perfect. So now we have that 6.5, 30-year term.
mhm.
Property tax is an estimate. Property tax a yearly a
Oh,
dollar amount, 5,000. We want to overestimate so have like a little cushion. And
5,000. Okay.
PMI, I would say about let's do two.
Okay. Two. All right, 2%.
Okay, homeowners insurance, I'll say about 2,000, 2,500.
All right, let's go with 2,500. It's better, probably better to be conservative or push that limit just to see in some
Yes.
parts.
Let's do no HOA right now. Let's do traditional home,
Okay.
single family home. So that's what we're looking at, ladies and gentlemen, for a monthly payment with PMI. What is PMI again? Monthly payment for your home is $2,937.34. So that's a good breakdown. I love the way that it breaks it down. You even have an amortization table. That's nice.
Yeah,
So
yeah, let's take a look at that.
mhm,
Amortization. Let me see if that's gonna. Oh, okay, it shows it below. So I have to scroll down just a
awesome.
little bit. Okay, so you have it here. We're starting in year 2025. It shows the amount of interest and the principal and then the total balance. And so after each year. So it looks like it's just it does an annual breakdown here.
Wow,
So
that's
get
nice.
that
But
3
you guys
years.
see how when you start, how high the interest is in the beginning and how
Yeah,
it goes down in the end?
it does look like it has some additional information here too. So mortgage details breaks it down in a different way. And it also has the monthly versus biweekly payment, which we've also talked about in a previous
Yes,
episode.
there
So
goes
that's
that
interesting.
biweekly payment, which is the same payment amount. It's just that they cut it in half. And look at the biweekly payoff dates. I love that you have that there. Look, February 2049. And look
Versus
how much
55? Yeah.
we're looking at the biweekly versus monthly payment box. Yes. And look at the total interest savings, $85,000, 87.42 just by doing biweekly.
Man, it's pretty crazy. Same
Yeah.
amount. People wonder, they're like, well, how is that the case?
More is hitting the principal, and the interest is based on the principal amount.
It's just funny how the math works out that way for the benefit of the banks. I've always been fascinated. I'm like, all right, guys, I get it. That no matter what you do, that's how it works out. But it's just it's funny how the banks always have that edge, kind of like the house when you go to Vegas or some sort of gambling establishment. So that's my homepage, just so everybody knows. And then, of course, you have the links up here that can take a different those different sections of the page. So that's kind of nifty, little anchors, if you will. Takes you all the way down if you wanted to go to that calculator. And then, of course, if you click on the Zenix little logo, it'll take you down there. So that's all the things there, and these will take you to the social medias. So there's another page here, which is the apply now. So if we were going to do business together, you, the watcher, and myself, and we click the apply now, and you'd have this little page here where I take you through a few steps on how I feel we should do things. So the video there basically just introduces you to myself as well as these paths that I'm going to show you here real quick. So first, here's all the states that I can assist you in. So obviously, I'm not licensed in all those states. I'll make that very clear with this asterisk here, and then this little note at the bottom. But my brokerage has another brokerage that it works with, and if I pay a little bit to a loan officer who is licensed in there, then I can essentially take the transaction. That is the reason why I can do that for you. So that's just why that is the way that it is. And hopefully
Yes.
that is very straightforward. So yeah, licensed in Texas. So I'm not paying any other loan officer to help you in Texas because that's where I'm at in the world. And here's the two paths, right? You guided versus your experienced path. So if you're taking the guided path, then I'm going to pretty much hold your hand and do all the work with you. So that's in a video above, it talks about that, how there's a meeting where we just go through the application together. And then the second meeting, I talk about your loan options to follow. And then the experience path is, let's say you want to do more of it yourself, more of a DIY, right? And so here I actually have a walkthrough of how to get to the application if you want to do that, which we'll check out in a second. And then, of course, you can just, if you click on the experience apply down here, what will happen is it'll take you straight to the application where you can begin filling in your information. The guided apply will just send me an email that says, hey, someone's interested in doing this. And then I'll just be notified via email. From there at the bottom, I just have some information about stuff that you should prepare ahead of time before our meeting if you really want to make the most of our meeting so we can really focus in on your questions more so than anything else. Just get all this information ahead of time, and that'll definitely help both of us, I feel. And it's also good for your knowledge to know like what it is we'll be talking about. And then, of course, scheduling a meeting, which I've done through Calendly. Hard to say that, but
Yes.
Calendly here. So you pick a time where it works out. It works out with my schedule, and we meet up there. So that's the gist of this page. And then I have some frequently asked questions will be coming in the future. Haven't quite cranked those out just yet because, well, I just need to find out what is most frequent. But over time, I will find out what those are and I will make little videos to go in that space. Another thing that's also missing from this page is reviews, but I'm working on those as well to get some reviews from clientele to share their experience. So what we do is, let's say you're going on the experience path. You're like, hey, I want to check it out. So you click on this one and what it does, it takes you to a separate page where I have a application walkthrough. So here you'll be able to go through the entirety of the application and you can actually click on the different pages here. You can see that these are the different pages of the application and it loads the video in correspondence with the video you need to see. Now, there are some pages because what I tried to do is keep the videos down to about 3 minutes at the longest, right? So just so you get through it quickly and people don't get bored
Right.
and what I did, though, there are some pages that require a little bit more detail. So if that's the case and you are finding yourself in that boat, then I've got other videos that are much longer, but it dives deeper into those subject matters for those particular pages. And so I just did voice recording because if I messed up or if I need to do something more or add something more to it, it's much easier to just pick up a microphone than it is to get dressed up again and be in front of the camera. So that's the reason that is the way that that is. But piece that all together, there's lots of imagery, a little bit of humor in there just to keep things good. But yeah, it's about 16 total pages with their deep dives if they're necessary. And that'll get you through the whole application process. So
Love
hopefully
it.
that's
That's amazing.
easy. And I also went ahead and moved the scheduling the meeting here because I figured you'll be doing that. And when you're done, you'll want to schedule the meeting. So I just went ahead and brought that over here. So in a nutshell, there is my entire website for everyone to see. So hopefully that's inspired other loan officers to maybe try and shoot for something similar. Or as a borrower, it inspires you to maybe seek me out to work with me. That'd be even better, in my
Yes.
personal opinion. You always want to make sure you have a lot of knowledge about what you're getting yourself into. Because again, it's a monthly payment. Like
Yes.
remember that. If you are getting a mortgage, because again, cash is king. We've always said that in multiple episodes. But if you're buying it like most people with a mortgage, then right, there's going to be a monthly payment behind that. And there will also be the cost that we saw in the mortgage calculator. But beyond that, there are other costs as well that you also need to start saving up for, like maintenance and repair and things like that, that are not covered in that calculation. But we'll talk more about that if we're working together, for example. Very, very cool. Well, again, guys, this is the beyond part. Make sure to like the video. Very important
Yes.
to like the video. That's how it gets us out to more folks. Of course, I'll put all of our information on the screen right now. So if you want to work with one of us, maybe you're going and buying a house soon, or you want more information about buying a house, feel free to reach out. We'd love to talk with you guys.
Just go ahead and comment anything you want us to elaborate on. Go ahead and put it on the comments. We'll be happy to get back to you. And thank you so much for listening to us. And I hope you gained some information. If you gained something, we did our job.
We're just trying to share that knowledge, make sure everyone gets educated. Remember, it's all about self-development at the end of the day. So always
Yes.
invest in yourself. Very important. And that's what this is today. Watching this episode is exactly that. So thanks so much for joining us, guys. Again, like the video if you enjoyed it, got something out of it. And we'll catch you all on the next one of Dave Bath and Beyond. We're all about mortgages and more,
More.
guys. That's right. Take care, guys. And
Bye.
until next time, be blessed. Bye.